Fine. We're here going to be talking about a couple of big topics today. Uh, LivePerson, it's had a big run up today and dropped down after. Very interesting. And we'll be talking about its news because they have got a deal with Google. We'll be also looking at the crypto buy the dip phase that seems to be occurring or having occurred, and checking with our analysis previously to see how it worked. It's good to see everybody in the chat. We've got our top chatters in there celebrating with each other, Parkside Boys. We've got TradeSpotting as well, and all the rest of you. Thanks so much to people who've been supporting the show so far as well. Justin Pickerel, and we have got our membership Flair coming in there as well. Queenie Jeannie, thank you so much, and everybody. So welcome to the show. We are in for a good time, but we'll not be here forever. So make sure that you get all your chat in the chat box. And if you want to reach out to me using the links in the description, then I've got my ears open. Quite cool running the chat there. We'll make some extra predictions for LivePerson. Some predictions if we can make it to the goal. The chat today mostly is going to be circling around those two major topics. That's a chart, that's a Tesla chart. Tesla and other, you see, this was the way that you can combine these topics together, is that Tesla is one of the tech stocks, and part of the story recently has been, of course, NASDAQ. If I just bring up the NASDAQ futures chart here, and we zoom on into the daily time frame, you can see that there was some big drops recently. Now, the news story for that, why did this happen? Well, we kind of have it charted out a little bit on the SPX chart, but this particular little nodule of price here, where we saw the prices pull back on tech stocks, affected a lot of things at the same time. Was it the drop in tech stocks that led to a drop in stocks like PayPal and in cryptocurrency? Or was it the news that led to a drop in both? You know, are these things linked in that way necessarily? Got some people coming in support of the goal, which is pretty awesome. Big shout out to all y'all. Marcus Ledger taking part as well, Queenie Jeannie as well, XD. We've got Merrick. Park Snoops. Nick G celebrating the Parkside Boys. Yeah. So this was the big drop, the backdrop, okay? And I think it's important to get the kind of the context. Now, if you're wanting to put this into terminology, words, using the jargon, what we're looking at is the macro picture. And we can do that a bit here with SPX, S&P 500. And the chart that we have drawn out in the past gives us a lot of clues as to what's been going on. When the prices of the index here broke through into all-time high territory, it lined up with roughly where the tariff extension ended at one point in time, funnily enough. Now, there's other ones you could say. Now, people who are really keen on the tariffs will know that this was one as well. Just pop a vertical line in here. This was August the 1st when tariffs were due to go up on places like Canada and Mexico that had been targeted there. But there was this grey area, this area in between these two dates, I think shows a great big explanation picture as to what's kind of happened in the story. Achieved all-time highs at the time when the first 90-day extension period of extensions was due to end. In that, those halcyon days of thinking that everything would always be cheap forever, prices pushed up high, and then we came back down to test the all-time high area at the announcement of tariffs on 90 different countries. It doesn't affect the EU, doesn't affect the UK. Why? Because when Trump was over in Scotland just last week, these people were smart enough, the leaders of the EU and the leaders of the UK were smart enough to go and meet him at his golf course, chill out with Donald. He's come all the way over to the side of the world. Why not? And he appreciates that, right? And that's why the EU and the UK have got a deal, and everybody else, well, they don't have a deal. They've not been schmoozing enough, right? We've been getting our schmooze on over here like it's the Victorian period all over again in Britain. This was big, okay? And it started overnight. And that's why I opened up the NASDAQ chart first, because it started overnight. It wasn't just the news happening during the day. On the NASDAQ chart, you can see here actually that the drop started as the news came out, hand in hand. You go to the 15-minute chart, you can see things have been looking a bit better over the last couple of days. But at the time here when the drop started, yeah, you know, it was happening for everybody to see. Right. That's the story. So if we jump on over to Bitcoin, we can see that how this was also affected by it. And we'll be getting into the LivePerson chat in no time, folks, by the way. No time at all. Getting into the LivePerson, digging deep, giving some predictions and stuff like that as well. Got a goal running in the chat right now. We achieved it because you are amazing. And Weezer rounded that off by saying hit the like button, you fannies. Have to agree with Weezer there. Got Latoya, Justin, Karen, 1,000 Years of Darkness, all taking part as well. Only shares in there too. Only shares. And Nick G, only shares. Hey, only shares could be a topic of conversation, right? Today, because volatility has been high on a few things. Now, if you've got shares, you're not exposed so much to the movements in volatility in the way that you might be with options contracts. And it's a good topic for conversation. So that's a nice name to give a shout out to. Here's the 15-minute Bitcoin chart. We have a box up above for success, glory, all the good things happen, take that box out. We've got a box down below, which is this sort of Parma violet purple color. It's not necessarily the end of the world, right? So we'll not panic, but we have got a sort of bigger panic box down below that you can see. 15-minute time frame's got these background lines that give us a good idea of the volatility channels. I've got them on a sort of smaller and smaller basis, like Marioska dolls on my chart here. So if you're a long time watcher of the show, you know what these bands are all about. They're very curious. So we're going up towards the top side. Challenging the top end of this does put us in towards the top end of that volatility band. Expect a bit of hesitation at the gap to make the leap if we do push up towards 116,587 on Bitcoin. But at the minute, it has, of course, pulled back. We're waiting to see if we can, survive this little bit of a dip. It's another buy the dip moment in the smaller time frames. But the bigger story here is, of course, if I put it on the daily time frame, and you can see the other volatility bands. We have moved down towards the lower end of this, coming down and testing the low side of this red channel puts us in the range at the top when the previous all-time high was being put in, because you had a high the previous day, right? Then you had a movement up that pulled back down, and then there was resistance following that a few days later, and that zone, that red zone, is where that box is. We also had resistance there on the way up, and then it came back down to retest it. So this is the kind of the geography of the chart right now. We'll take a look at Ethereum's one in a moment, because that's the same thing. Same stuff. We've got great detail from last week's show. Confidence restored up there. If we do push above 123, you can see we got so close to doing it, didn't quite make it there. Traders of crypto, all of them, Bitcoin and the altcoins alike, will have been well versed in how that story played out emotionally. If you were looking at the charts at the time, thinking how close it was to the confidence restored point, you probably felt that in whatever you were trading. And then, of course, the pullback right from that line came up, had a sniff of it, and had to move away. Well, this is what you get when you've got long-term high quality technical analysis on your charts. We're going to leave that on there. You saw the line on the SPX chart that said all-time highs and so on. We've got these details in the charts. We keep them on for some time. We review them as we go. Right now, I'm feeling all right about the prospects of crypto market, because the overall story from the last show remains. It remains. And as you can see, if it actually loads up, that's the wrong chart, isn't it? FUSD here is the right chart. So this is the stuff that we talked about in the show. We did see pullbacks down to 3,500. It did push on up higher as we predicted at the time, but it was unable to continue to push on higher after that, because of course we had the external negative catalyst coming in of the sorry guys, my battery's giving me a battery warning. It's okay. Okie dokie, and we're back with power. Okay, cool. So so what we predicted was that there would be a push on up higher, because we've got this macro story on the crypto charts as well. But then there was this pullback that happened, and it's happened to line up with the pullback that we saw on the Nasdaq chart with the news of the tariffs coming in, because it's a risk of inflation and a risk to the economy overall, right? So that negativity affected the Nasdaq chart first, and the Nasdaq chart then bled through to the crypto chart. Well, it happened simultaneously, but the risk on the markets is quite high, and we know that crypto is a canary in the coal mine for that sort of thing. Right, that's the story. So what did we then have to rely on? Well, we saw the analysis that we had already in place, and it had worked perfectly, and it continued to work well, and we saw the pullback came down to the 3,300 level that we had predicted it would go to if it pushed below that number, which looked like it was likely at the time. And the question was, where is it going to find support? Well, we'd that mapped out in advance. That's where it found the support at, and right now it's in between. Okay, it's in between. It hasn't pushed higher, it hasn't pushed lower yet. And this is the 24-hour time frame. Smaller time frames, you could make all sorts of cases about what sort of consolidation is happening in this region. The fact that it hasn't pulled back down below the purple box, which will now extend over, is very, very good. And I'm going to be bullish while prices are above that purple box to keep things nice and simple. I'll be neutral while there are, of course, between it and the one below. And then if they push below it, I'll be bearish down to these lower targets, because we could come down to test the large macro trend line, which is absolutely possible. However, we're still remaining in a bullish stance, even though there's been this pullback. There is a buy the dip moment. It's dodgy, right? But we have, of course, got the story from the background about all this, which is this, which we made the prediction about first of all, and we had a chart pattern to look to. So this here measuring stick's a bit wrong, really. A bit wrong. If we just clean this up a little bit so you can see the story properly. So we just call it something like this, and we'll be very generous with the depth, right, of the head and shoulders. Very, very generous. Maximum generosity there. Maximum generosity. And we'll take that as the measured move, and we pop it up above. This is what we were going for, right? And this is what we managed to achieve. We just compare to the left and see, okay, so we did find some resistance at an area where there was resistance previously. And if we think, well, what was that number? Whereabouts were you most likely to find that resistance? Let's kind of use the third area of confluence to third factor of confidence to make that decision. And we can do that simply by using the Fibonacci, and that was a 382 target, which is a common area for a pullback during a trend. And it's actually the big flip for us to get bullish really on these two versus each other, like alt season essentially. So having a bit of a pullback at that area, having pushed on, made perfect sense. So if we just kind of map out what happened here, this is us kind of still looking at doing technical analysis, talking trading, investing group together. We're super serious about doing this. Also as well, we want to be able to map out the markets in advance and understand what's happening, so we can make the most profitable decisions. And if we just have that movement there in mind that happened there, that was of course this area at the top when we pushed on and went for a move up, then we came back down. So what we find here is that the world somehow conspired to put out this negative news at the exact same time that we were kind of due for a bit of a pullback to test the areas on this other chart. It's kind of, you know, amazing the way that this consistently sort of happens. Like you've decoded the world, you've seen the truth behind how the world works. You've got a code, something that you can quantify the chaos with, something like that. And up here we're consolidating this region, right? Yes, there's this region, you could call it a broadening wedge, right? You could call it a diamond, right? Depending on how you exactly you're looking at this and the time frame and so on. Are we going to consolidate in this region? If this happens to form like this, and I need to have a diamond, the either way with sort of classical technical analysis charting, if you're just looking at that, either way, whatever the pattern is in this region, we'll just put an X through it there. What you're looking at is some proportion of this down the way as the movement up, perhaps not including the pattern itself, perhaps including the pattern itself, depending on just strict way that you're looking at it. Either way though, you can know that no matter what, for that to be successful, you have to take out the sort of theoretical resistance neckline, right? And this is where charting classically wraps in again with a whole bunch of other stuff. As we know already, the story here is the 382 was the big first sort of check mark, and that's that line. That's our first point. Second point is the previous highs, technical resistance there where there's possibly supply and bearish motivated to come in there to, you know, but break that, and then of course that story flips and they become buy side liquidity, of course, on the movement up. And we also have the previous area of resistance here, which happens to have had like a bit of being support in the past as well. So this is a big area to push through, and it puts us up into this range here where we'd be aiming towards the prior highs into this range. It clearly was a prior range in the past and will be again. That is what would be happening over here. So that's the story. So that right now leaves you wondering, well, hey, if this is the consolidation up here and it's got the legs to run, if we know it's got the legs to walk up as far as this, but does it have the legs to run? What it boils down to has to be, you know, your position on Bitcoin and the crypto world in general. If Bitcoin, of course, stays at high values and the Ethereum pairing moves up above it in value against it, then that means Ethereum's going up exponentially against the dollar. So you want to see this maintain its value against the dollar, right? And that's why the important analysis came back to saying we have got our zones mapped out, the red one, purple one, green one, so on. That's the crypto story just now. Cool. Okay. So how about I do a look at the LivePerson chat, right? Because we have our plan for the show today, which is these things here. And this buy the dip story on Bitcoin continues. Which is groovy. Where's my remarkable screen share? Sorry, chaps. Just a sec. It's up here. Get it. There we go. Updated. So that's the story. That's the thing at the minute is a question of the crypto buy the dip continuing. Are we still positive on it? And so what we answered there is that there's clear bearish markers and signposts, right? So we understand them, but we also managed to identify that the bullish narrative is not over yet. And we also know that this has been linked to sort of sympathy in trad markets, like NASDAQ, for example, and SPX. And we know that the story there has a technical story. So if we take the SPX, which is of course the main dog in the show here, and we say, so what did we discover about the SPX is that it had an all-time high break that happened to coincide with in the period between tariff dates. And that's actually just a case of fear in the market, and we had a retest of all-time highs. So that was a story in the bracket between the date and the next date. That's what that kind of symbol tries to show you, because we looked at the charts, right, and we saw the movement up and how that lined up with the all-time high, and we analysed that story, and it's like that was something that kind of needed to play out given the way that the tariffs came in and so on, retest of all-time highs. So long as things stay up, we can be bullish, but if things all drop down in all the different markets and so on, then we're going to see that they are still linked, and it could pull the crypto markets down as well, even if there's a positive story overall for crypto currently, which there is currently overall. So that's the story there, and we saw it in the SPX and how that lines up with the crypto. So we understand that there is a sort of a procedure in place, a procession, like the way that the planets move around the stars, and we can say, well, because of how this event works, we needed to have these events happen thereafter. So we had a major macroeconomic news event that was followed by a confidence being hit because of fear, which meant that prices dropped back down to retest the all-time high. However, we also know that the biggest trading partners, sort of UK, EU, managed to get there by schmoozing and doing a deal. We know that there's a roadmap for countries to reduce their tariffs. We know that the tariffs that are being imposed on India are a sanction as much as anything, because they're to try and prevent them from furthering a war that's costing human beings their lives, and it's a terrible thing to be trading and buying Russian oil right now, and we all agree. So that's bad that they're doing that. So the markets then kind of eat this a bit, and they think, okay, so it's a bit impactful in Brazil. There's still provisions for Apple and smartphones. They're still working things out to try and make it so that the countries can work together, because it's like a sanction deal, which is very pro-UN, really very pro. It just doesn't have to go through the UN, but it's very pro-UN, very pro-normal, pro-getting the world back on the right track. Give it a few days, it doesn't feel so bad in the belly anymore, this tariff thing right now. And also Powell held interest rates high, which mitigates the risk in terms of the economy, which gets us one step closer to being able to cut the ribbon and move forward together into a positive era. Whoever it is that's pushing and whoever's pulling, getting there together at the same time for everybody, the economy, the underlying factors like your unemployment numbers and your the payroll numbers and so on, all that stuff, and the business confidence reports and the GDP figures, all that stuff, right? We all want to have all stars aligned together. So we're still on track for lots of that stuff. And then you think, okay, so a few days go by, that's how you feel. Maybe the story remains in case. And we haven't broken down below key levels. And as such, you just have to say that's the analysis, right? Happy to change my mind if things go against it. Now let's take a look at LivePerson news, right? Right. Now, loads of people will have loads of opinions about how the world is going and what's the most important thing to look at. But what I did there was I took a starting point and I moved on to another topic and I moved on to another one and I showed how these two topics relate to each other, having used this intermediary. Then I moved on to another one and I showed how those two topics work together using an intermediary, so that in total you can understand the relationship, because we had things like NASDAQ, we had things like Bitcoin, we had things like SPX, we had things like interest rates even coming into play there at the end on the summary, and so on, along with tariffs. And we acknowledged the fear in the markets that exists, and most importantly, of course, we did the whole thing from a risk management managed perspective. Okay, we did it all from that point of view, so that there was safety first in any investment decisions that you make, talking about where you would know that the markets had gone against you, and that we did it using the scientific method. Because what we did was we looked to see if we could prove ourselves wrong, right? Not confirmation bias. That's what we just did as we ran through the analysis. It came to the conclusion that I'm still bullish on the crypto markets and that this buy the dip moment continues overall. But there is a definite degree of caution in the air. The reasons I can be so is because a structural, procedural, processional test of the markets happened after negative macroeconomic news, but we didn't see them breaking down below the highs they put in as we got up to this point in the feelings of all the positivity. So we thought, okay, we feel X positive, we've got some Y negative news, what's the net result? Well, we feel as positive as we did on the day when, and we haven't broken that yet. So even though you might be like the monkey in the cage that got given a donut, then got given an extra donut and got the second donut taken away, and they feel sad, even though all the other monkeys just got one donut and they feel happy all along. Try not to let the loss of that happen, and that's why it's a buy the dip moment. Okay, so there we go. Risk management first. LivePerson chat, right? We have got some. If you find value in these videos and you think it's good and other people should watch because it's the best trading show on YouTube and possibly the best analysis you'll get, profitable and everything to boot, along with amazing education, then just do hit that button, right? You know, don't let anybody stop you. It's free to do for you. Express yourself. LivePerson is the next chat, and we've got a big bit of news that came in here, and it's going to be the Google news. So let's go Google up some Google news. We're going to use Google to find the Google news here. It is kind of ironic, sort of. LivePerson Google, and we're going to go news, and we'll go to the news from 8 hours ago. LivePerson announces expanded partnership with Google Cloud to transform enterprise AI outcomes and customer experience. And we'll just take a quick note to say that this is news, first off, is positive. And then we'll take a look at the news in a bit more detail. So it's extended its partnership. Expanded strategic partnership with Google Cloud marks an important moment for LivePerson. Future customer experiences, said John Sabino, CEO. That's cool, we're hearing from the CEO on this one. Embedding Google's Cloud's AI capabilities directly within LivePerson's connected experience platform will empower businesses to resolve customer queries faster and deliver personalized support. It comes with a series of bullet points about how great AI is. Combining Gemini 2.5 with LivePerson's vast conversational data, brands will gain deeper insight into customer sentiment and context. What we have here is a story where you have a company which is often asked about, you know, people would say, I'm interested in this company who does like AI chatbot messaging, and people would often say, why would you be interested in a company like that when things like Google Gemini exist? And that, you can understand, is a very basic wrong interpretation of what the company does, right? Because the company is using things like Google Gemini in its business, and it's delivering on a different mechanism. I asked in my show 2 weeks ago if people wanted to hear about football, or I said that they would tell them an old thing about football. And in 1400, King James of Scotland, and unfortunately I can't remember the English king's name, but in the 1300s, some English king, excuse me to the English people, I might be from Britain, but there's Scotland is the good one. So anyway, what they did was they banned football. They banned football. And it's just amazing to think that here's a sport that's existed for nearly 1,000 years in one form or another. Now, there are a couple of problems with this in terms of like the story, right? The stories, and what you have is that people in England, right, what they do is they think they invented football because of these things, right? And they've actually got no public record of the king words, right? There's no public. There's not been digitized. They can't get it. It's not out there. You can ask the internet and it'll tell you about it. It's not out there. But Scotland does have that. It does have that. And it feels to me that until I see with my own eyes, and you can call me a flat earther type mentality if you want, but until I see with my own eyes, or tinfoil man, there's a conspiracy afoot here. People in England saw that some guy in Scotland had said they'd banned football back in the 1400s, and they're like, we better find a record from the 1300s where we banned it. And then it's like, well, show us the record. So we can't. It's it's a book. It's very precious. Don't anybody go in there. And the records that they talk about, you think, oh, well, if they found it recently, we can trust them. No, these records in England came from 200 years ago, and nobody's gone and looked. They just accept it. So there's a story about football, and it's a story as well about what does it mean though? Like, what does football mean, and why has it got anything to do with LivePerson? Right, is the question. Why has it got anything to do with investing in stocks and that? Well, football is a thing where the rules of football is kind of really what's more important, and like when they were defined, and you've got like, or at least when, not the rules of football in the modern context, but the rules of football in terms of like, when did it stop being that the entire village took part and that often people died, and because this report in England of football from the 1300s had said that what they did was the entire villages took part, and they weren't even, the ball was nowhere to be seen. Apparently they were taking the ball from one village to the next 3 miles over. It's like, and 2 whole villages are taking part for a whole day, and people are getting murdered and beaten up and robbed. It's actually just like 2 villages raiding each other, and apparently there's a ball involved at some point. And then it evolved into being more of a game where people were playing in teams against each other in a smaller pitch, and then it became more and more real. And it's like, when did these things happen? And what benefit do they get from them? So I'm telling you 2 stories at once. One is to do with LivePerson, and it'll become clear in a second. And the second one is to do with England didn't bloody invent football, right? I just do not agree with that. And tell me in the chat box if you're like a fan of Ted Lasso or anything like that, even if you don't agree with me using the word football. If you're more of an American egg ball fan, let me know. But there's that story, and there's a second one, and it's that. And I'll tell you how that has anything to do with LivePerson through football. Football is like, in any sport, you could just have it, and it could just exist, where people just play it with each other anywhere. Who are you to tell me that league is the better league? Who are you to say that your cup is worth winning? Why should I want to compete in the Champions League by UEFA, and why do I want to be in the FIFA World Cup? Why don't I just make my own World Cup? Everybody's played football for 1,000 years. We could just have our own World Cup. We could just have our own World Cup because football exists, right? It's always existed. All you need is a ball. All you need is a ball to play it, and anybody can play it, and it's existed for thousands of years. So I'm not going to use the FIFA ball. I'm going to use my own ball. I'm going to go out and I'm going to find a pig. I'm going to take its bladder. I'm going to fill it up, and I'm going to kick it around with the people here locally, and I'm going to call it the World Cup. And I'm going to do that because I don't need somebody else to do anything for me because this thing exists. And that's the debate that people have when they say that LivePerson shouldn't really shouldn't exist in the world because, OpenAI have got ChatGPT, and it's like, yeah, it's funny that you say that. Yeah, OpenAI have got ChatGPT, so I could just get a football, and I could just call myself Cristiano Ronaldo, and I call my neighbor Messi, and we'll play with each other, and it'll just be the same thing. It's like, no, you've got this amazing thing that could exist as crap for 1,000 years unless anybody put any actual layer on top of it to make it usable. And the people you want to do that are the experts at doing that. And that expertise comes at a price. And it's a price everyone's willing to pay because the product is just so much better as a result at the end of it. And yes, they still use the same footballs that you can buy from a shop or indeed inflate your own pig's bladder to make. They use the same football. They use Gemini to do it. They do. And they have their own AI. So actually the debate about whether that is a thing or isn't a thing is about as really makes as much sense as the debate as to why I don't just set up the World Cup here with my neighbours and a pig's bladder, because that's nonsensical. And that was why I told you the story about England and football, and thanks for thanks for sticking with me through it. I hope you liked the extended analogy. But the point being that this is good news for LivePerson, it's good news for their customers, but it's not like amazing ground-shattering news. The fact that they work with Google, and I've heard some positive things about it, could even be extended out to saying that they'll get cooperation on advertising together. So they'll help market each other. And that there are a few key points about that which are worth mentioning, I suppose, obviously, such as the fact that Google are big and LivePerson are small. And that's a really nice dynamic, etc. But also as well, the fact that Google want to work with LivePerson also takes that debate about anything, and it just puts a line through the debate again. You don't need any long football analogy. It's the fact that Google are happy to work with LivePerson and stuff like that. That's another part of this. They are happy to have that and to cooperate and to market together and push these products together is really quite significant, and it defeats that debate entirely. So there is a really underlying positive news story here, but to say it's equals to being earth-shattering, it would be an exaggeration, right? Earth-shattering equals no, but what it has had is this sort of effect on the charts. And to say that something that is relatively minor as compared to something else, such as if the board of directors were to come out and say at some point something like, oh, you know what, we actually foresee the company being able to survive indefinitely. We've stopped our customer churn and we're growing now. We're actually starting to look forward to when we publish our next results. We'll maybe we will, maybe we won't be in profit. I don't know, maybe it won't be in profit properly until Q1 of 2026 or Q2 of 2026. Maybe it takes until Q3, but the fact is that we're now 100% confident that that's going to happen and that the road runway that we have is more than sufficient. And what we're looking to do is to maybe even gear up our hiring and stuff like that. We'll not be going back to the shareholders and releasing new shares to be able to pay our customer bonuses and our staff bonuses quite as much or whatever necessarily, because also the stock price is going to start going up, or whatever kind of news that they all come out with and all that. And it sounds way more positive to people who are investors. Then I think you would see an even bigger reaction than this particular news story. But what we did see today was that we had, it wouldn't be a Rocket Group show if I didn't draw a line on the chart by accident when trying to move it. What we saw today is we had a movement up of nearly 100%, right? Nearly. In pre-market, it was up at about $1.58, $1.60. You're talking like last week, it was in the 80s to 160, nearly 100% move up, right? Wow. and then we've had to come back down and retest some things. Okay, so we came back down and retested the previous area of support and resistance. Quick shout out to previous show watchers. I've explained support and resistance in the past, and yeah, you know, we've come back down and we've retested some of this. That story about what happened with the Nasdaq and SPX, how they went to a move up and then had some negative news, came back down to retest the level. Well, that kind of happened in the space of a day today with LivePerson, and the result is it's closed at 117. It's trading post market at 114, and things can happen really quickly as an investor. But you might have been invested in this for 6 months or a year, and you're looking thinking, oh, you know, when's the day come then something happens, and you might have this feeling that it'll be like every day a little bit happens. But quite often it's that there's a big move up and then there's, you know, nothing for a wee bit and then there's a big move up. We're also asking questions about what if the company itself does start to put out positive data? Like, that could happen in the next 6 months. Maybe we have to wait until we get the full 2025 full year report and they analyze it and say yes, but look at the last 6 months, look at H2, second half of the year. What about that performance and that compared to the decline in the first year? And we just chart that out. Maybe we get some hard data. If we get something that really empirically says that the company is on the good track forward, wow, it's more impactful than some good news. Yeah, this is what you get from good news. And then people in the future would look back and they would say that this was just a part of the volatility that happened near a bottom. Because when you put this into the bigger picture, then you can see that this little kind of move here, which was really big, as we know today, if we lived through it, seeing it open at 145, ending at 117, trading pre-market 158, post-market 114, it's big moves in a day, especially when yesterday it was at 86 cents. It's big stuff. And this is really small on the screen when I've zoomed out and showed you the context in the past. And that this is the type of thing that you start to see when you've got a pot of water on a pan boiling or moving, heating it up. It's not quite boiling yet. And you stare at it and stare at it, you slowly see this little bubble start to appear on the surface and then plop up and down. It's not quite boiling yet, but you're seeing this movement happening. Well, you start to see that, don't you, in the charts in the same way. So the story of this company is one that involves both a longer term picture and a sort of, if you like, a belief, because the hard data isn't out yet. It involves the classic narrative of a shift in the sentiment in the market before the fundamental data necessarily represents that in black and white, because speculation will exist by definition before there is the hard data to back it up. Therefore, what we're looking for is a trend to emerge, where even if we see a pullback on the chart here to 86 cents again, we start to see highs come in that were higher than previous highs and lows come in that were higher than previous lows, to start showing that there's a change in the overall direction of the sentiment from the speculators before the fundamental data comes out. And given that the earnings are coming up in just a number of few days here, it starts to become a real question, because we know that the story on this will turn around and will be seen in the way that the margins move on the earnings reports. And we've been keeping such a clear and close eye on that story, because we know that there is a figure for costs and a figure for income, and that there is a margin that exists between these 2 points. And we want to see those get smaller, and so we want to see those decrease. The margins of the losses, right? So we want to see the improvement on the margins. We spoke about this in the show a couple of weeks ago when I went through it in detail. So we know what we're looking for in the upcoming report. we've talked about that. We have understood about the sentiment, and we're looking to see then how things would happen in a bull market. So if we had that bullish sentiment in the market, because it would happen typically before it's really represented in the data, sometimes people get surprised. It could be that we're the only ones speculating, in which case, we're waiting for everybody else to come in. When they do, they'll say whatever price they get in at is cheap because they'll be looking for something much higher, but that'll be higher than the price is now to attract that type of investor. That's fine. That's the reward that they get experience in the time, which we're experiencing now. We get the reward later for that time. So we've explained that, and we know that we want to see these factors all start to line up and result in a trend happening before that we even get the data. And we also know that with some good news, we got a nearly 100% rise in stock price on a little bit of good news that wasn't the most earth-shattering good news. However, that means that we got that news during what's still basically a bear market. Good news in a bear market is less impactful than good news in a bull market. It really is that simple. Therefore, if the trend was moving up because sentiment was bullish and had shown that on the trend on the chart, and then the fundamental data that comes from the company starts to actually show a real hard data turnaround, and then there is any sort of good news like this, then the moves that happened, which are 100%, they could be 200% moves, or they could be in absolute terms far bigger, with maybe not in percentage wise, because we are at such low prices that a move from 80 cents to 180 would be over 100%, whereas a move from 180 to 280 wouldn't be over 100%. So as we know, this is the benefit for being in here so early, and that's the chat with this, and this is how I feel about the current story with LivePerson. yeah. So we've got earnings coming up here. All right, Monday the 11th of August 2025, soon. And my prediction isn't going to be so much about the numbers that are coming in here. Here's an estimate. Will we beat expectations or not? I do think that we can beat expectations. Whether it comes in clean or not is the other question. We looked last time we had this report of 64.7 as the revenue figure, and this time the estimate is 58.57. So that's pretty much 6 million, and that was the anticipated decline. But I think we could see better figures than that, like just better. Maybe my sentences aren't full enough there for people to understand. In previous earnings reports, we've had hints and data that suggest that there is a movement down anticipated of around about X million per quarter, and we've seen that play out in the numbers actually as well. And then the trend and average, if you take that perspective and just average it out, would also put it towards that number, perhaps less. One of the problems with this earnings revenue thing is that they come in with a slightly higher number than I actually would have predicted that they'd have said there was the prediction. So it does make it a little bit more difficult, but I do think they can beat them. My prediction for this one is going to be that we get a little bit more of that story about where we are in relation to the full year picture. So we're past the midpoint of the year now, and although what they're reporting on isn't what we're going to be hearing, will be from people who are living a couple of months past that point, or a month and a half past it anyway. And I want to hear how they think it's going, and I think we'll get some hints about that. And John Sabino, I think, will be in a good mood, following on from things like that partnership and the moves that we've seen in the stock recently. So, okay, cool. We can get a bit more specific on predictions and stuff like that if we want. If people are wanting to do that, we can also just make sure that we're not missing anything in the chat box, and everybody's having the best show of their life. Go Into Win did 5 memberships earlier on. Big thanks for that. Karen has been here for a year and has been enjoying it. That's great. Bullish on the community from Justin Pickerel. Merrick telling everybody to hit like is a great guy there. Minner, we miss you, Rocky. Grateful for your wisdom. And Kitties did 10 memberships earlier on as well. So that's brilliant. People get memberships, can see my old streams. And what you can do is you can dip in and you can just And I know you think, right, okay, old content, what's the benefit? Look at the depth in today's show. Just look at the depth. And do you even care, at this point, do you even care about whether it was about Bitcoin, Ethereum, and LivePerson, SPX, NASDAQ? Or do you just see how amazing the lessons are here that they apply to so many different things, and how there's so much in the context of the time and explains the way the story connects together, and it's done in advance. Typically, we've got a little bit extra to talk about because I was not here last week, and looking back retrospectively. But you look back at the shows, you'll see so much of the prediction side and how it plays out so often. It's very, very intriguing. You should really check it out, especially when it comes with all that explanation to a real investor, from a real investor. You can tell there's something different going on with this show because I'm a real investor, got real money in the market, real skin in the game, do this for a living, and the experiences that I have, or lived experiences that I share with you as we go through the charts and we trade these things. I trade them, trade these things, invest in these things, and I'm invested in LivePerson. Very proud to be invested in it. I'm looking forward to other big rises that we have in the future. This bit of volatility just now is nice. It's nice. Yes, it's been a red day, but it's nice to see that level of volatility and activity in the stock in the run up to a fundamental news event. Yeah. Can't help but learn here, says Lisa. That's right. Yeah, thanks, says Colin, to go in to win. Go in to win. So Airwolf was a cool TV series. Yeah, it was sort of like, yeah, it was like a killer whale in the sky with doctors inside it. It was just naff compared to Knight Rider, wasn't it? I would take the Rockford Files and Knight Rider over Airwolf any day. But when you're stuck and you don't even have anything like SG1 to watch, yeah, okay, I'll take a bit of Airwolf. I'll take a bit of Airwolf. Great theme music too, points out Kitties, and he's not wrong about that. It was great theme music. Okay, so we've now discussed LPSN in some detail, and I think that the story, my feelings on it are pretty clear. We've had a big move up. We've established some zones of real interest. Here's one at 109, for instance. And I think that you can just look over to the left, right? And you can see, if I just take my screen all the way over the left, you'll see that some of the prediction stuff in here is uncanny. So liquidity, right? Liquidity that existed in here was real. Let's just draw a box over that so you can see that this is what we're talking about in this area here is real. And yeah, we came in and tested that today. Being above it at the end of market is nice, right? And staying above it, I think, is pretty good. Leaving a big old gap on the charts is always fun because it makes the world kind of look at it and say, hey, what actually happened there? Was that, so did I miss out on something? And they maybe get a little bit of FOMO off the back of it. So that's good to have. But will it be retested? If I go to the extended towers and I put on the daily time frame and I show you the rocket outcrop indicator, you'll see that there is a flash down there towards 86 cents. Jimmy pointed that out to me earlier on, for example. These things do exist. They could easily go and give that all back. Could give it all back to the market. It could. I'm definitely not going to say that it wouldn't. Instead, what I'd like to focus on is, like, how would we start to know that it might not be? Because I'm not going to be talking about this live tomorrow. Do a show once a week. Make sure you hit that notification bell so you don't miss these. It's really important you hit that notification bell, by the way. You obviously have to be a subscriber, but you have to hit that bell. Subscribing without hitting the bell just means you're missing out. There's almost no point in subscribing. This here, right? You got to this area we've got to stay up here, right? We've got to stay up here for some time and put in a bit of a base. Now, there was some liquidity in this zone that has been retested with this movement up. We could find ourselves having to do absolute retests of things like a dollar, might not be fully established quite yet. And we're already operating below what would be a measurable 236 on a Fibonacci scale if you wanted to say, oh, was the movement today back down the way sufficient enough to leave people feeling that the bears are in control in the movement? And it is when it's below 126. If you're looking at the charts today, you probably fully sort of internalized these numbers already anyway, because you'll have seen the prices struggle at that area after it pushed back up towards the top side. It got to 125 and then it pulled back down again, and there was some support there on the small time frames, smaller than the one I'm looking at. A bit of resistance. It tried, it failed so many times. So yeah, so back up above 126 starts to be very positive, but hey, you know, movements down towards this area like 88 cents is absolutely possible. So is this enough? Well, we can talk about things like the impulse we've seen here, obviously way high on the 50-minute time frame, that required a pullback to happen. When we look at the 4-hour time frame, however, we just simply see that it's gone up into the bullish control zone. Follow through and movements up tomorrow wouldn't even be that radical. It would only be taking out our previous high on the RSI, moving up, you know, and sustaining prices up above 140 at the moment, you know, given that movement that we've seen up today. You know, you're kind of looking like that you'd need to have prices go up as high as that to really start to push that up to those higher levels and sustain up there. So like here you go in the daily time frame, it's like it's a nice movement back up. It's only just got as high as the bullish control zone. It's not even got into it, you know, it just broke through the center line. So the story actually here is, can we sustain things up and shift sentiment into the positive side? We've given ourselves a nice margin over the $1 kind of psychological round number in there of about 17 cents. So to say it would be, if you just sort of call it done and say that we've already won and it's turned bullish, would be premature and perhaps have an air of complacency to it. However, to deny ourselves the experience of celebrating the great move up today would also be inexperienced in itself from an investment point of view. You have to experience the positive side of the movement up here above the serious psychological levels, and the demonstration of willingness for the market to run off the back of rather insubstantial news, like a wound up potato gun waiting to fire. You know, we're all spuds akimbo over here, ready to go, and the market's got this underlying positive sentiment that when it erupts, capitulates bears in short order, leading to rises up in pre-market like 158 as we saw today. So any sort of sustained positivity leads to outcomes like that on a consecutive basis, and I'd be happy to see it happening. Looking at the chat here, I do think that I've managed to miss out on anything here. There was just another quick look at React. Minner was asking what altcoins I'm favoring. Again, you know, Sol and stuff like that are good, but I'm also looking at some of the others, you know, here and there, just some of the others like layer 2 coins like Arbitrum, layer 1, layer 2 coins on top of the Ethereum network like Arb, which, you know, captured in a lot of the net asset value, but I do need to like lock liquidity. Would like to see that move up. It's about 4x its current levels though in terms of its actual net asset value. So it's a wee bit off in terms of fundamentally, but I'm looking at that with interest. And 1inch and so on, like exchange coins on a similar sort of basis to do with total value lock, TVL values and so on, historically and current prices, and looking at the supply and thinking to myself, well, hey, are there opportunities here when sentiment runs, which would be quick run and grabs, or grab and goes, perhaps? If we look at React USDT, and I'm just only going to give it for 30 seconds here because we are coming to a sudden halt on the show. We're looking at it on MAXC, has pulled back somewhat, it's gone to a little area where there is a little bit, has been a bit of a knot in the past in price action. It does need to sustain it up above that. Movements down below here are quite negative. It relies on the story for overall, and they saw the push up that happened towards the end of July, and there was a subsequent drop. Okay, so it's kind of following the markets like it was a couple of weeks ago, man. Chat more in the Discord though. And as to everybody who's been watching along, thanks so much for being part of what we do. And I'll catch you next time. Parkside boys, everyone. Parkside boys! Parkside boys! Parkside boys! Parkside boys! Hit the like button and subscribe.